Welcome to Serious Money. I'm Barry Mitzman. The tremendous growth of the internet is giving rise to whole new industries: electronic publishing, online advertising, internet commerce. Amazon.com is not the only Northwest public company that's pioneering in this area. Tonight we'll talk with the CEOs of two other regional companies, both public, that are looking to establish themselves as leaders in this new mass medium. Later in this half hour, we'll learn about On Health Network, a Seattle company that seeks to become the leading source of health information on the web. First, Find.com, based in Seattle, develops, maintains, and hosts corporate websites, many of them quite elaborate, with multimedia and interactive features. Clients include Microsoft, the NASDAQ stock market, Marriott Resorts, and the state of Washington. During the first 6 months of this year, Find.com took in $2.7 million in revenue, basically flat compared with the same period in '97. The company's net loss deepened to $1.2 million from $77,000 a year earlier. The company went public in August last year at $6.50 a share, trading on NASDAQ under symbol FDOT. The stock has plummeted since July to around 1 3/8. The founder, chairman, and CEO of Find.com is Dan Fine. Thank you for joining us, Dan.
Thanks, Barry.
Now, tell me, Find.com is a web developer, and sometimes seems to me that every 25-year-old in the universe right now, or at least in North America, considers themselves a webmaster and web page developer. How does Find.com differ?
Well, I hate to say this, but we say any moron can build a website, and one usually does.
Yes, I think you're right.
And what we found is that, we're just 2 seconds after the Big Bang here in terms of the lifespan of the internet. Direct mail started in 1872, and not much has been learned since then. You look at the potential on the internet, it's huge. And what we found is that big companies like our clients need a navigator to take them through these treacherous waters, and that's how we differ. We're a very sophisticated company.
The sites you're involved in are quite elaborate by internet standards, even by internet standards.
Oh yeah, you look at NASDAQ and Marriott, the sites we built for Microsoft, Intel. We manage the General Electric site, which you can imagine with all their divisions is absolutely sophisticated and very, very big.
Well, give me an example of the kind of elaborate or complicated or sophisticated services you can provide.
Well, we can do a lot of things like e-commerce, where we can sell from business to business or business to consumer. But the important part is wrapping yourself around the customer. And how do you manage so that you can increase lifetime value of that customer, lower your customer acquisition costs, profile your best customers, and do that all with interactive strategies. And that's what we do, is we figure out how to do that for a client, we teach them how to do it, we build it, and then we maintain it for them.
A number of these sites are highly interactive. I was reading about a site you developed for Polygram Pictures for their movie, What Dreams May Come, the new Robin Williams movie. Tell me about that.
It's a pretty wild movie. Yeah. I mean, it's a very wild movie, and it needed a very appropriate site for it. So we built a very sophisticated site where you can go in and if you've seen the movie, you can paint your own dreams, and this is what you can do on the site. And it won CNN Site of the Day. It's really a great site. It's whatdreamsmay.com.
Right. Now, for Microsoft, you've been involved in the development of their intranet, is that right?
We've done so much. I mean, we were the first company to do an NT SQL site for Windermere Real Estate in 1994. So we built a good relationship with them. And in fact, Bill Gates, when he introduced Internet Explorer 1.0, asked us to build the demo for him that he introduced at Comdex. And recently, we built their first e-commerce site called developerstore.com. Very sophisticated in terms of its cross-selling and upselling. I
saw a figure in one of your reports, financial reports, that Microsoft at some point was about 20% of your business, your revenue was coming from Microsoft. And they provide referrals as well to companies that are seeking help in developing sites. And they send them to you, oftentimes.
Well, we believe we're the most sophisticated Microsoft developer out there for the internet, and we specialize pretty much in just their products. The key for us is we found that it's probably better to partner with Microsoft than work for them, because they're on such a tight schedule, they're always burning through. And what we tend to do is plan our projects out. They're very complex, very sophisticated, take a lot of time. And so we tend to partner with them instead of...
So how much money really is possible to be made in this kind of business, in development, in maintenance, in hosting? What are companies willing to pay for or expecting to pay for these kinds of services? What kind of fee range are we talking about?
I remember the day when my first site that I did for $10,000 in 1994, and now we're signing contracts, in the millions for the lifetime of a client. So they've dramatically increased.
Now let's talk about the business. Is there a clear balance of your revenues in terms of development versus hosting? Is one significantly larger than the other? Where's the thrust of your business?
The thrust of our business, we think that a good web development company needs three things. It needs good creative, it needs good strategy, consulting, and it needs good technical expertise. And so we get money from those three. And it's the strategic development, the creative, and then building it.
Mm-hmm. Now, you've been growing the business through acquisitions. Just recently you acquired Meta4 Digital Design, a company in New Jersey that is in the web development business. You've made other acquisitions as well. Do you think that will continue to be, this is a very fragmented industry, lots of small companies out there. Do you think that will be a source of growth for you in the future?
What's weird is we're a fiscally conservative company, believe it or not, in the internet space, and we've decided not to grow for growth's sake, but to really focus and balance our growth. And so the Meta4 acquisition and the acquisitions to date have been very select, and we're going to be very select about what we do in the future.
Yeah, part of what I suppose may have tempered investors' enthusiasm for the company is that you haven't been on a fast track in terms of growth in revenue just lately in a 6-month period. First half of the year, revenues were basically flat. Why is that, or what's the plan?
Well, what we did is we took the year to just get ready, to build the foundation and be prepared to grow, because we went public last year, and the public gave us some money, and we've taken some of that money, we've kept enough to operate on for the future. We've taken some of that money and put it in place so that we could grow next year and the years beyond. So we hired the right people, we built out the infrastructure, we opened up in Europe and Japan. We're ready to go.
You have a deal with Mitsui in Japan to help market your services in Japan, is that right?
Yeah, many people don't realize they're the world's largest company. They're #1 in the Global 1000, 500-year-old company, and we talk about the Japanese economy has actually helped us with people are starting to look to how do we get more value for the yen? And being efficient and using interactive technology is a way to do that.
You opened an office in London, you opened an office in the Washington, D.C. area. You also opened an office this past year in Santa Monica, Southern California, and then closed it. What went wrong there?
I think it took just a deep breath to say we didn't think it was the place to be, and we decided to cut our losses quickly instead of drag it on. But it turned into a hyper-competitive market down there, and we feel that the way to grow is not through organic growth, but through acquisition. Get enough people there. You
mentioned the company being financially conservative. You went public in '97, you raised, I don't know, $6.5 million, something like that, in the IPO. Looks to me, looking at your financials, at least as of the mid-year, that you're burning through the cash fairly quickly. In fact, had burned through about half of your cash and marketable securities during that time, that 6-month period. What's ahead? I mean, will you need to go to the capital markets again? Or?
Oh, no. And it was actually, and I know it sounds weird, but we planned it. I mean, we've grown and spent the money to build out our infrastructure, hire the people, get the offices in places, do the acquisitions. And now we've reached that bell curve and we're coming down like this. And so we're getting ready to go back to
It must be somewhat frustrating to watch, say, an Amazon.com go public, I think originally at 16 or something like that, and go up over $100 a share at one point, and to be sort of overlooked by investors who have sent other internet stocks skyrocketing. What do you think's involved there?
I used to think that being public was either black or white, and it's not true. There's a lot of shades of gray, and we're in the small cap market with not a lot of support out there. And so we've learned that what we have to do is go out and market our stock, talk to the individual investors, show them how undervalued we are and the potential for growth.
Turnaround in terms of your financial performance, in terms of the growth rate or becoming profitable might also draw attention to the company. Is that in the cards? That is profitability?
Absolutely. I mean, we wanted to grow.
Frame?
Well, we're starting to come down off the losses and head back into profitability. And we think by early next year we'll be back in the black and growing. We're already seeing record revenues come in.
Interesting, exciting business. Thank you very much, Dan Fine, fine.com.
Thank you.